The different partners of Project Sela are all very active in these fields of CBDC, payments, and cybersecurity, as I'm sure many here in this audience are. Let's hear about what they are doing. We will start with an update on the progress of the Bank of Israel Digital Shekel project. It's my pleasure to invite you to the stage, Yoav Sofer, the project manager, to share some updates.
Thank you, Adi. I think maybe the best decision we've made so far in the project is to make you the host of this event. Project Sela has been a dream for, Mr. Lee said we were working actually on the building of the project for like 6 months, but really all in all with thinking about it, initiating it, writing the concept, procurement, forming the partnership, procuring our amazing partners. We've been around this for around a year and a half, so a dream of about a year and a half is coming true today. I'm really excited about this day. There have been so many thank yous officially, so I'll spare all of that. I think there's actually only one person in the room whose parents are here. So I'll say, Daniel, Achi Yakar, Toda Rabba for everything. Thank you for this partnership and for this collegiality and for us being able to form all of this together. I really can't imagine how a day will look without having something on Project Sela on my calendar, a call, a sprint review, a report writing session, whatever. So all of us really need to find something to do together in the future because you can't all just disappear from my lives like this. Thanks everyone. But I'm here to talk about the Digital Shekel project and tell you where we stand with that. So I'll start just with a brief kind of a history of the project. The Bank of Israel started thinking about CBDCs back in 2017. Sigal Ribon is here, had led the team at the time, and that team was studying the topic, which is relatively new to all of us for the first time. And the recommendation to the then governor was that there was no reason to proceed with anything practical at this point. The same team came to the current governor 2 years later. The world had changed in so many aspects, and they actually recommended that we launch what we now call the Digital Shekel project, an action plan, okay, not something that we know that we're going to implement at this point, but something that will get us prepared to implement perhaps in the future. And the whole topic was actually scaled up to under the deputy governor and the steering committee, whose members are almost all are here today, are overseeing the project. 6 months later, the steering committee had published our first report within the project, where we had drafted some potential motivations and a draft model for the Digital Shekel. We have since then published 5 other papers, and these papers actually reflect our business analysis, our policy thinking, our technological explorations, and the public consultation that we did along the way. Of course, what we have also been doing is some technological explorations with international partners. So a few months ago, we concluded Project Icebreaker, where we explored cross-border possibilities of CBDCs with the central banks of Norway and Sweden, and of course, Project Sela, which we're celebrating here today. The technological projects go side by side and hand to hand with the analysis that we are doing, okay? The demo that you saw today is not necessarily the Digital Shekel CBDC, and Project Icebreaker is not necessarily how cross-border transactions will work in CBDC, but these explorations, and actually people in the audience are coming to me and saying, hey, but how will this work, and how would that work, and who would the liability be on? So yes, because we are doing technical explorations, we are also raising a lot of policy questions. This is the role of these technical explorations that we're doing, and we hope to have more in the future. However, at some point, someone thought that exploring and thinking and analyzing may be fun, but you need to set some kind of a target for all of this. So our steering committee has set for us a target that by the end of 2024, we should have some kind of at least initial, correct? An initial design document. I was hoping that the deputy governor will not be here by this stage, so I was going to say that I think that this deadline is extremely ambitious, but we'll do the best we can to meet it. Once again, this design document will not be something that enables us to launch a CBDC on January 1, 2025, but it will be something that will hopefully enable us to go out to the market with an RFI and to actually reflect to the whole ecosystem what the Bank of Israel thinks about how the Digital Shekel should actually look like. And I'll actually, my presentation will focus mostly on that in a minute or two. I will remind you, though, many of you have maybe seen this slide already in the past. If you have not, please go to our May 2021. By the way, I should have said in the beginning, sorry, I should have said that you actually don't really need to listen to my talk because you can actually go into the Bank of Israel website, Hebrew or English as you want. This link will take you directly to the digital shekel designated page where you can read all about our project. There you also have our publications, and in this publication we actually outlined what would be potential motivations for the digital shekel in Israel. I'm not going to list them right now, but overall, the main motivation that the Deputy Governor has mentioned in the morning, which is to allow access to the public to central bank money. There are specific motivations that we've been diving through, and they're kind of guiding our project since. Another thing that we did, and I invite you to follow, is that while we have not yet decided on issuing a digital shekel, we did think about what would be the scenarios, what would be the triggers that may actually move us from an action plan to a decision. I invite you to read this document as well. I'm proud to say that this document was actually featured in an IMF document from just 3 days ago. The IMF published a document on how central banks should explore CBDCs, and they dedicated the whole page of their article to this paper that we published back in April this year. So this was all kind of necessary background. Let's talk about the design process that we are doing, how we are actually doing, and what's taking place within this process. So actually, when we got this kind of instruction, we asked ourselves, okay, so how do we approach it? How do we get ourselves into a situation that 2 years down the road, this was a couple months ago, that 2 years down the road, we're actually able to present such a design document? And the first thing we did is we took a couple of months to identify what would be the topics that we need to explore. What do we still need to analyze and think about before we can hand out a complete design of the digital shekel? And we have identified around 20, we call them work items. For us, they're work items or tasks. So we've actually completed some of them already, and I'll focus on these in a few minutes. We did some work regarding acceptance, published this one actually. We did some work on the cost structure, privacy, scheme management, and who should be the end users of the digital shekel. So these I will focus on in a minute. We are currently working on issues of what should be the access technology, how would the logical architecture look like, and what should be the immediacy and finality kind of characteristics of the digital shekel. The bummer is that there's still a lot of work down the road, and we've identified many more work items. And what is clear to us that maybe what is also different in this stage of the project than in the previous stage is that right now we are not just analyzing or thinking, we are making decisions. Okay, we are making design decisions with the team, and then the team brings those design decisions to the steering committee, and we hope that the steering committee will sign them off on them, and they have on some, as I'll show in a minute. It's important for me to say that it is clear to us that these design decisions cannot be completely final at this point. So they do guide our work down the road. But for example, it's obvious that you cannot really make decisions regarding privacy before you're thought about AML. It's very important to think about how will immediacy and finality work before you thought about consumer protection, for example. And there are many examples here. So it is clear to us that this decision-making process will have to be iterative. And we may need to revisit some of the decisions that we've already made as we progress in the project. And this is why December 2024 is a completely achievable deadline. So this is what we will be doing, and the way all of this is hopefully going to work is that we will, at the end of the road, we will collect all of these work items that we're working on, okay, on immediacy, cost structure, data, design, acceptance, offline, et cetera, et cetera, et cetera. And from each one of them, we are extracting decisions, and as I told you, and we're also extracting requirements. So what is the practical implication of each one of these policy or design decisions that we're making? And then all of these decisions and all of these requirements will need to be agglomerated to some kind of a complete design document that we will have at the end of the road. This is kind of the process that we are going through. So, as I told you, there's some work that we've completed already, and no, before I do that, I should also say, and important to say this in this room, that it is clear to us that we cannot make all of these design decisions on our own, okay? We are a team of not many people, and if we just sit in the room within ourselves and design the digital shekel, we will not be doing a good job because we need to interact with the ecosystem. There are many actors in the ecosystem that we need to get their input on this as well. So what we've done when we move the project to this phase is that we have launched 3 consultation forums, one with government entities and regulators. Some of you are here today. Another with what we call the potential end users, so like the retail organizations, the industrial organizations, the consumer protection agencies, and the like, academia, and another with the financial industry. And we are meeting with these forums on a quarterly basis and sharing our work as it is ongoing, receiving feedback, communicating what we're thinking about and what we're doing. If you're in the room, it is most probable that you belong in one of these forums at least. So I invite you to email Adi and ask us to join the forum that is relevant for you. We will consider your requests. We are happy to enlarge the forums and have relevant people. The discussions there are professional, are relevant, and you may want to participate with us. I'll say, though, that if you're in the room and you have a technology that you want to offer to us, don't contact us yet. Because at this phase of the project, what we are doing is policy and business design. We are trying to do this as technological agnostic as possible, okay? We do not want to make design decisions that will limit us down the road to one technology or the other. So it is clear to us that we will need to do some technological considerations down the road, but we're not doing them at this point. So, what are the decisions that we've made so far? Let me share the main ones with you. Each of one of these work items results in something between 5 to 15 decisions, something like that. Some are major, some are kind of secondary. I'll try and share the main ones that we've received so far. First, regarding the scheme. We decided that the digital shekel should work within a scheme. The Bank of Israel will, of course, be the owner of that scheme and will also be the operator of it one way or the other. And just like the Bank of Israel regulates any systemically important payment system in the market, the Bank of Israel will also regulate the digital shekel scheme. The scheme would also include PSPs. These are actually the likes of the access enablers that the team has showed earlier. So these could be institutions, not necessarily financial institutions, but institutions that will provide the digital shekel service to the end users. And the scheme must also include those, what we call FIs, funding institutions, mainly in Israel, currently the banks, but we hope that there will be more institutions down the road that will be holding customers' deposits. So they also need to be part of the scheme because they need to actually enable customers to fund and defund their digital shekel wallets against their bank accounts. We also decided that we think that funding and defunding should be mandated, okay? So your bank cannot, just like my bank cannot tell me you cannot exchange your deposit against cash, my bank must enable me to exchange my deposit against cash if I want to, or the other way around. Funding and defunding in the digital shekel scheme will also be something that banks will need to offer. On the cost structure, the decision that we made here is that, first of all, the Bank of Israel will bear its own cost. So just like in cash, that we don't actually pass on the cost of minting the cash to the economy, the Bank of Israel will bear the cost of operating and establishing the digital shekel system. That does not mean that there will be no cost at all. However, we did decide that for individuals, the basic services should be free. So if I want to make a payment to Android, if I want to receive a payment, first of all, if I want to onboard the system, to make funding and defunding operations, these are kind of basic systems, basic operations that should be free for individuals. However, if the PSPs offer more advanced services, just as like some of them we've seen in the demo before, then these could be charged against. And of course, businesses will also, well, not of course, but we think that businesses will be, PSPs will be allowed to fee the businesses for the service that they provide them. We think that intermediaries may be allowed to specialize. So let's assume that I'm an intermediary that I want to be a PSP serving the taxi drivers industry in Israel or whatever, okay? So I don't necessarily need to onboard any Israeli that wants to approach me. But that means that there may be a situation where there may be Israelis who are not actually onboarded by any PSP. Therefore, we think there should be some kind of a solution, some kind of an intermediary of last resort that will actually onboard any Israeli and provide at least the basic services. We have not yet decided who that would be and in what form and what would be the regulation regarding that. On acceptance, we did some work asking ourselves, how do we ensure that the digital shekel would actually be accepted? So first of all, in that, we see a very important role for government payments. The government is the biggest merchant in the economy. In fact, all of us make and receive payments to one or another government entity within our even within a month. So we think that actually at launch, the government should actually allow us Israelis to make and receive our payments to it with digital shekels, of course, if we want to. Not instead of other means of payment that we use with the government today. We believe that acceptance would be supported by advanced features, so not just the basic payments that we have today. I won't get into these, but I can talk about them for 3 hours, but there are all sorts of ideas of advanced payment features that could be done in CBDC systems. But at the same time, we also think that if I am digitally excluded because I cannot use a smartphone or something like that, that there should also be a solution for those people that are not able to access the digital shekel in the regular means of payment that we can think about. We believe that offline support will also be useful for acceptance because it will allow a more streamlined payment experience in cases where the system fails or something like that. And we've given a lot of thought to the issue of legal tender. This is actually complicated. I think our analysis has showed that the fact that the shekel is legal tender in Israel does not actually mean that if I approach a merchant now, the merchant must receive cash from me. Okay, it does not mean that. So even if we decide that the digital shekel is legal tender, it will not actually mandate acceptance of it. However, we believe that maybe even declaratively, it is important that the public treats the digital shekel just like it treats the physical shekel, and therefore we do think that the definition of legal tender should apply there as well. Privacy is a very interesting and important topic. We did some work on that as well. And the first decision that we've made is that we believe that the level of privacy in the digital shekel should be somewhere between the complete anonymity that we have with cash. We cannot have that, but we cannot have, we do not necessarily need to have the full information situation that we have these days with the private digital means of payments. So that actually means that intermediaries will have less data or less permission to use the data than they have in the existing payment systems today. For example, we've given some thought to the issue of monetization of data, and we think that intermediaries will by default not be permitted to make economic use of the data unless there is a very clear consent and not just a click, 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 I agree, okay? A very clear consent process where I, as the end user, am willing to allow my intermediary to monetize my data. Most importantly, I think, the decision that we've made that the Bank of Israel will not have access to identifiable data. So similar to what we showed earlier in the demo, okay? So if I am making a payment to Daniel, the Bank of Israel will not know that Yoav has the digital shekels, that will not know that I made the payment to Daniel, okay? All that they will know is that someone in the system made a payment to someone else. Who will know the information? The PSPs in a manner similar to what they do today, and therefore, if there are the enforcement authorities in the economy, so like the tax authority, the AML authority, if they need the information, there is no central place at the Bank of Israel that the tax authority can come and just reap the information, and they will need to do it at the same way that they do these days with the PSPs. Who should be the end users of the digital shekel? Who is it actually for? So first and foremost, of course, the Israelis, okay? The individuals, the organizations. Organizations is a general word meaning businesses and all the others that we didn't think about, okay? So individuals, organizations, subject to KYC, okay? You need to be KYC'd if you want to onboard the digital shekel, but if you're an Israeli resident, you are entitled, okay? You have a right to use the digital shekel, of course, if you want to. And we'll speak in half a minute about what does it mean that you have a right. We did some thinking about the issue of kids. Kids can use cash, right? At any age, right? There's no limitation. If they're able to hold the coin, they're allowed to use it. kids in Israel cannot use digital means of payment at any age. Okay, the age for opening a bank account is 14. The age for getting a card is currently 16, by the way, if you don't have a 15-year-old daughter who really wants to use a digital means of payment. And we think that the age for using the digital shekel, for having your own digital shekel wallet, should be lower than that. We did not really put a number, but we think it should be lower than that. But more than that, we think that if I, as a parent, want to allow my 6-year-old, okay, to have some pocket money digitally, then I will be able to allow them some kind of access to a sub-wallet of my own, which I can monitor and which I can see what's going on there. Like, it's actually my funds, I'm responsible for them, but I can put aside some funds on my child's wallet, and they can then go to the supermarket or the store, or pay something to their friends or whatever. Foreigners. We see no reason why foreigners, by general thinking, should not be able to use the digital shekel, assuming that there is a PSP in the system that is willing to serve them, to KYC them, to onboard them, and serve them. Okay, so you can think about, why would foreigners want to use the digital shekel? So I don't know. Maybe there's a travel agency in Cyprus that works a lot with Israelis and wants to offer Israelis the possibility to pay with digital shekels. That makes sense. Maybe there's what we call in the team, maybe there's a cowboy in Idaho that has no affiliation to Israel whatsoever, but they want to use the digital shekel. If there's an Israeli PSP that's willing to serve them, to KYC them properly, so be it, okay? However, they do not have the right like the Israeli, okay? They're allowed, given that someone's willing to serve them, and maybe the difference here could actually be with the intermediary of last resort. So if I'm an Israeli and for some reason no KYC wants to onboard me, it's not profitable for them, I can go to that intermediary of last resort. If I'm a cowboy from Idaho, okay, that's not an option for me. We do think about tourists, though. The tourist should have actually some kind of a streamlined process, perhaps to KYC in more kind of relaxed terms. And for example, when they land at Ben Gurion Airport and something like that, they should be allowed to use the digital shekel in some relevance to the context of their stay, until they leave, or I don't know, a week after they leave, or something like that. Okay, so this is actually all about the design decisions that we've made. Oh, my timer has stopped. That's cool. Looks like I'm still at 12 minutes. Luckily, I'm also following with my phone, and I see that I'm 2 minutes behind, so I'll try and speed this up. We did some work about the legal aspect. We have been asking ourselves what would be the legislative changes that we may need to do if we actually want to issue a digital shekel. There's actually 3 parts to this. First of all, you need to make sure that the Bank of Israel has the authority to do this, so you need to make sure that this authority exists in the legislation. You need to think about what are the legal implications of the different characteristics that we will decide upon. So, for example, if we decided that a child can use a digital shekel, we need to make sure that this is also okay with the legislation, and if not, maybe opt to make changes in the legislation. And we also need to apply existing legislation to the fact that we'll be issuing the digital shekel. So, for example, if the law says that I'm not allowed to counterfeit banknotes, and if I do, I'll go to jail or whatever, you need to make sure that the same applies for. Was that not too off-legal, Michal? Just descriptive. Yeah. Of our thinking. I'll say, though, that at this point, unlike the ECB, for example, we have no intention to initiate a legislative process. We'll just thinking of this and preparing for this at this point. So before I say thank you, I do want to say thank you actually to, first of all, my team, Amir, Moshe, Nir Yacobi. It's good that you're all sitting together. Doron Ershko, Ori Chaimovic, and the newly joined Asaf David Margalit. I'm presenting this work actually, but it's actually work that you guys have been doing together also with Yoni Miron, our Chief Data Officer, who's been working on the privacy, and Michal here, who's assisting us with Michal Sinai, who's assisting us with the legal thinking. So thank you all very much. And once again, contact us if you want to participate in one of our forums. Thanks, everyone.
Thank you, Av. The Hong Kong Monetary Authority has been exploring CBDCs for several years now, focusing on wholesale, retail, domestic, and cross-border use cases. Recently, the HKMA launched an ambitious pilot program for the e-Hong Kong dollar, with a total of 16 firms participating and offering various use cases. Michael Law from the HKMA will lead us through some of the interesting insights along their CBDC journey.
Good morning, everyone. Thank you very much, Bank of Israel, for hosting this conference and for the warm hospitality, and especially a great welcome. Thank you for putting all this together. It's great to be back to Tel Aviv after many years, and this time on a direct flight. So my name is Michael Law, and I'm FinTech Director at HKMA. So our office work on a lot of things related to FinTech, but we also spend a lot of time working on CBDCs. So today, I'd like to take you through our CBDC journey in the next 15 to 20 minutes. So this slide will give you a very brief overview of all the work that we've been doing on CBDC. So as mentioned, our exploration on CBDC started in 2017, and with the initial focus on wholesale CBDC. So you have heard earlier that the first project that we have conducted on CBDC is called Lion Rock. So it's like a rock in the shape of a lion. It's a very famous mountain in Hong Kong. So we move on to a second phase of this project with the Bank of Thailand called Project Infinite Lion Rock. And in 2021, just 2 years ago, this project has been expanded and renamed as Project Enbridge. So we have been working with the BIS Innovation Hub and also 3 other central banks on this project. So this is now our flagship wholesale CBDC project, and Benedict will be speaking more about this project in her presentation later. So in the rest of my presentation, I will focus on the retail CBDC work that we have been doing. So this slide will give you a very brief overview of our retail CBDC journey. So as you can see, we only start our retail CBDC journey in the past 2 years, but we have gone a long way already. 2 years ago, we started 2 projects around the same time. The first one called Project Aurum. Aurum means gold in Latin. And the second one is Project E Hong Kong Dollar. So in the past 2 years, we have issued a few policy papers. The first one being like a technical white paper to talk about the technical design of an architecture of a retail CBDC in Hong Kong. The second one focused more on the policy aspect of the EHKD. And based on these 2 rounds of public consultation, we have come together a position paper in September last year, just 1 year before, to talk about our overall stance of the retail CBDC in Hong Kong. And around the same time, we also published a paper to talk more about the Project Aurum prototype that we've been working with the BIS Innovation Hub. And earlier this year, we kickstarted our EHKD pilot program with 16 firms. And of course, we're happy to launch Project Sela today with the Bank of Israel, and it marks a very important step in our exploration on retail CBDC. So Project Aurum is the first project on retail CBDC by the BIS Innovation Hub. So basically, we have created a technology stack to demonstrate the tier distribution of retail CBDC that include two different layers. The first layer is the wholesale CBDC layer that we have used DRT system. And the second layer is the retail layer that use more conventional database technology. So very much we have adopted a UTXO model in this Project Aurum. And we have also made some mobile phone apps for people to see how it can be used in real life as well. So I'd like to stress that this whole project is now open source and shared with the central banking community as a global public good through the BIS Open Tech platform. And we are also working on a phase 2 project for this Project Aurum, also with the BIS Innovation Hub, and we'll focus more on the privacy aspect of a retail CBDC design. So moving to Project EHKD, so I've mentioned that we have published a policy paper last year to talk about our stance on retail CBDC. So basically, it's now called a free rail approach that we are taking to maximize our readiness for a possible implementation of EHKD in Hong Kong. So under Rail 1 and Rail 2 that we are conducting in parallel right now, under Rail 1 will lay the legal and technical foundation for a possible implementation of a EHKD. So similar to what Yoff just mentioned, we are doing a lot of legal review internally, but at this point, we are not at a point to kickstart any legal amendments for our EHKD. So round 2 of our project EHKD is more about doing a lot of pilots and explore use case and explore different architectures together with many of our partners, including the industry, with academia, and also with other international partners. So round 3 will be based on the experience that we have under round 1 and round 2. So if we do decide to go ahead to issue our EHKD in Hong Kong, then we'll proceed to round 3. So we are not at round 3 yet. So the EHKD pilot program that was launched earlier this year is a very important part of round 2. It would help DHKMA to understand more about the different use case of a retail CBDC in Hong Kong. Because as you appreciate, in Hong Kong, we have already a very mature and competitive retail payment system. So how a retail CBDC can add value in Hong Kong is a very important question. As Howard mentioned earlier, commercial viability would be a key consideration when we decide our retail CBDC. So under this EHKD pilot program, we'll work together with the industry to explore the different use cases and examine how it can be used in daily life. So the first round of pilots that we've been doing this year, we are partnering with 16 firms to consider different use cases in 6 major categories. At the same time, we are also establishing a CBDC expert group comprising of leading academics in Hong Kong. They came from backgrounds like computer science, business, and law, and they would work together with us to consider a lot of important aspects of our retail CBDC, including privacy, cybersecurity, and interoperability. So we are doing a lot of stakeholder engagement similar to what the Bank of Israel is doing in this respect. So this gives a very brief overview of the 16 pilots that we've been doing with the firms. You can see we can categorize them into 6 major categories, namely full-fledged payments, programmable payments, offline payments, tokenized deposit, settlement for Web3 transactions, and settlement for tokenized asset. I will go into these 6 major categories a little bit more in my later presentation. But as you can see, there's a dotted line in between. So what does that mean? So on the left-hand side, we kind of come to a view that these 3 categories can be done even today in the more traditional world. For example, you can, of course, use your CBDC to make payments, and programmability or conditionality is something that we have seen in some of our daily life today as well. And of course, with cash, we can also do a lot of offline payment, but we'll expect to allow offline payment for a digital EHKD as well. But on the right-hand side, those are the things that are getting us into the new world, in the tokenization world that we'll see. I think tokenization in general is like a very hot topic in the finance world today. So the right-hand side are all use cases that were related to tokenization. So moving into more details of the 6 categories of use case. So the first category is what we call full-fledged payment, which is using your EHKD to make payments for your day-to-day transaction. So as Daniel just mentioned in his presentation as well, like today, if you want to make an electronic payment, very often like the merchant is only receiving 97.5 cents of a dollar, and like he will actually get the money 2 days after as well. So like with a retail CBDC, we're aiming to be able to enable instant settlement and also at a minimal cost for the merchant as well. But of course, it's very important to consider the like cost aspect, like who will bear the ultimate cost. And I think that will be a question that we'll have to examine in the next phase of our exploration. And of course, like with full-fledged payment, we can also help the merchant to get more data about the customer as well. And from what I've heard from our Bank of Israel colleagues yesterday, loyalty program is a big thing here in Israel. And also we also have quite a lot of loyalty program in Hong Kong. And we think that with full-fledged payment, we can help some of the smaller merchants to build this platform to help them to build their own loyalty program with the smart contract capability that may come with a EHKD. So the second category is called programmable payment. This is a very important category in our pilot program, and a lot of pilots are actually doing exploration in this category as well. So we can see programmability can bring a few benefits to us. The first one is from a consumer protection aspect. In Hong Kong, there are a lot of prepayment schemes. For example, if you go to a gym, you may sign for a gym membership for 2 years, and you pay it upfront. But sometimes a gym may go bust during this period, and sometimes it can be very complicated to retrieve your funds with the bank. So with programmability, technically we can improve consumer protection, and also we can provide a common standard for the industry to develop conditional payments as well. And we can also allow some of the grant scheme owners to ring fence and better track the usage of funds. For example, in Hong Kong in past few years, the government has issued consumption vouchers to the general public. So how you can make sure that the funds can be used for only designated purpose that may be something that we can make possible with an EHKD through the programmability feature. And lastly, with the programmability feature of EHKD that may be having, we can also leverage smart contract to enable more atomic settlement. For example, just as an example, today, if you want to subscribe to a mutual fund, you may need to pre-fund your brokerage account first, and then you subscribe to the mutual fund. But then, like, the actual transaction will only take place like 2 days after, and you don't actually know like at what price you are buying that mutual fund. So potentially, with programmability and atomic settlement, this all can be improved. So offline payment, I'm not going to spend too much time because I think this will be a little bit easier to understand. With like a EHKD, we will also want people to be able to transact with offline payment as well. And some of the features that we are experimenting with the private sector is whether we can enable dual offline payment, which means both the user and the merchant can transact in an offline environment. And this can be possible through the use of cryptography and some other technology that the industry have. So moving on to tokenized deposit, I would say this is a very different model to retail CBDC because tokenized deposit would remain a liability of the commercial bank. But still, we are exploring different models that we can implement a CBDC in Hong Kong. In this model, very much the banks would issue their own tokenized deposit, but at the wholesale layer, the settlement would take place through a wholesale CBDC. And we see the scope to enhance efficiency and transparency of the payment. For example, today, like if you swipe your credit card, as I mentioned, like the merchant will only get the funds like 1 to 2 days after. So we have been working with the private sector, and we see there may be scope to enhance this settlement process through the use of tokenized deposit. The next one is to use a EHKD to perhaps settle some of the transaction on the Web3 space. Today, you can't really do it. Like you have to rely on stablecoin to do all the on-ramping and off-ramping activities. And in Hong Kong, the government has issued a policy statement last year to really like push to develop our Web3 ecosystem in Hong Kong. So a EHKD can potentially be like a more efficient and direct settlement instrument for all these kind of Web3 activities. And it can provide also price stability and also confidence that will be needed to empower other kind of financial innovations. So lastly, so this category is more about the settlement of tokenized asset. So today, there are many kind of real-world assets that we can tokenize, but at the same time, you also need to settle it with the money as well. So with a EHKD, we can potentially, for example, tokenize a real asset, a property, and then settle the transaction through a retail CBDC. So it can help to mitigate the credit risk for some of the lenders as well. So it can lower the interest rate for the borrowers through the programmability feature that I've mentioned earlier. So I would like to conclude to say that all these 6 categories of pilots have been underway for now. So we are doing a lot of pilots this month, and we'll be publishing a report to summarize our preliminary learnings from all these pilots in the next few weeks. So stay tuned for the report. I would also like to say that in Hong Kong, November every year we'll organize a FinTech Week. So we'd like to invite all of you to come to Hong Kong. As I mentioned, there's now a direct flight between Tel Aviv and Hong Kong. So hope to see you all in Hong Kong very soon again. Once again, thank you all for your warm hospitality, and thank you very much. Thank you.
Thank you. Project Sela is only one of many interesting projects that the BIS Innovation Hub has been leading in the CBDC space. I'm happy to invite Benedict Nuals from the Hong Kong Center of the Hub once again to give us an overview of the main lessons from the different BIS projects on CBDC and tokenized assets.
Okay, good. So I'll verify this time the screen is okay. So today I'll just give you a quick overview of the different CBDC projects and also some other projects that we are doing. And it's really to open your mind so that you realize we're not very narrow actually at this time. So in terms of CBDC, this is the slide pre-Sela. Post-Sela, I'll need to find space on this slide. But in sum, we have a large series of CBDC projects or CBDC-related subject topics. And on each of those, as I mentioned before, to a certain extent, this is already public goods because we are giving high detail in terms of how you can think through certain CBDC topics. So first of all, on this side here of the slide, we have the Enbridge, and I'll come to that for 2 more slides, so I'm going to skip it now. Then you see the Orem prototype, and Orem is a bit of a broader project, you could say, to Sela. So in both cases, as you can see, we've used an ancient coin as the symbolism. But Orem is a very different prototype. It is actually based on a 2-tier, an assumption that it would be a 2-tier CBDC, that it would be distributed through the banking sector. So that is the difference with Sela, where the assumption was we open up the ecosystem, and to do that through the access enablers. So it depends on where people want to go with this, but in some, for Orem, we do have the full code base. It was developed in conjunction with the Science Center in Hong Kong. So it includes a DLT, a wholesale DLT on the top, and it includes the wallet system on the bottom. And the wallet system is making use of the UTXO methodology of Bitcoin. So by nature, it is actually a pseudonymous system. So it already achieves that. We're, however, going to extend this project into a further study of privacy technologies. So in sum, that is available as a public good, the code base to the central banking community. So for example, if the Bank of Israel wants to access that code base, they can do so. It's available, it's free. Then we have another project, which was mentioned as well by Yoav, and which the Bank of Israel was part of, which was Icebreaker. And this project looked at, let's now assume we all have these retail CBDCs, and I am a traveler, and I want to go from one market to another market. How am I going to fund my wallet? So this is a way of funding these wallets. It also covers other areas such as FX, which is a very, very tricky one because there might not be a lot of, for example, liquidity in certain currency pairs. So what this showed is the use of an algorithm that would route between the better off, the direct rate between the two currencies, or a rate with the vehicle currency in the middle. So this is still creative, and I think in the future, at some stage, this will be reused. Then the next project we have is Rosalind. Rosalind is out of the Bank of England, and that project was looking at the use of APIs. Which APIs do you make available as part of your CBDC system? How do you design these APIs to be highly usable by your community? And in the process, they allowed the building of a lot of prototypes by the equivalent of what you would call in Sela the access enablers. So in quite some creativity there. And this in part answers the question, why do you need a CBDC? You need a CBDC, I think personally, that the answer has to lie in programmability. So if it's not programmable, it's going to be very similar to current payment systems. But if it's programmable, then it can achieve new use cases. And that's what Rosalind demonstrated. So for example, there were micropayment use cases. And as we all know, the banking sector is very reluctant to engage in micropayment because it's not very profitable for them. But if you design your CBDC properly or your APIs properly, you will get to that outcome. Other use cases concern trade finance, which I will come to later. Again, very much an underserved sector as it comes to SME finance. And also green finance. So in all the topics that the banking sector would see as marginal, those are the topics that could be served by a well-designed CBDC. The next project you see there is Polaris. That one explains in much detail. So for the cybersecurity people in this room, this must be nirvana for you. I would say for me, it's very hard to understand. So it is a series of reports that explains cybersecurity in the context of CBDC. So I would consider it very good reference material. And the next one on the scale here is the use of AMM, automated market makers, a concept from DeFi, for the purpose of creating liquidity in currency pairs for which the liquidity is low. So that's what Mariana is about. So again, I wanted to show you this so that you have a feel that our range of coverage is quite broad, and all of these reports are publicly available. So Enbridge, just to mention to you what that is, because the Bank of Israel is an observer to Enbridge as well. So that is the only current project within the BISIH that is using DLT for the purpose of cross-border payment. So the idea is that we build a common protocol or a common platform where CBDCs can facilitate atomic settlement in the cross-border context. Now, you all know cross-border is plagued by high cost, low speed, low transparency. For example, you don't know where your payment is. At least that's what used to happen to me all the time. I send a payment to Europe, and where is it exactly? You don't know. Now, it is improving with Swift GPI, so I do want to point that out. There are operational complexities, the exact same that Lian showed you for Sela, which is the many intermediaries, and therefore the impact on needing to hold liquidity is actually the same in a cross-border chain. It's very similar. So you could eliminate actually a lot of this cost as well. And lastly, we say something called limited access, because as a result of the global fines that have been imposed on the correspondent banks, which were very significant in size, a lot of the correspondents have withdrawn from many markets. And as they withdrew, these markets become excluded from the financial system. So we call this jurisdiction financial exclusion. This project is the only one that achieved an actual real value pilot. And what that means is we sent real value through the platform. There was a total of 20 participating commercial banks, 4 per jurisdiction of 4 jurisdictions. There was a total of 163 payments, totaling $22 million. And this went without actually a hiccup. So the good thing was there wasn't a need for severe intervention from our side. So this project, we're trying to drive it in the direction of an MVP, which is a minimum viable product, but which would also be a live product. So it is a system that stays up and running. That's where we're trying to go to. And we're trying to achieve that by, I could say, the middle of next year. To achieve that, we are extensively working on the more boring topics, the non-tech topics, that is legal governance. We need governance documentation, and we need very clear legal documentation as to the participants on the platform and who signs with whom, these kind of relations. So the good thing is, whatever I've said here might have gone over your head. But we have a summary report. This was just prepared for the FSB, and you can look it up. These are the wholesale projects, and these are the retail projects. So now, maybe I just mentioned to you 2 more projects that we've done out of the Hong Kong Center. Because they are different and they're trying to stretch us further outside our box. And the box right now you can see is CBDC, right? But the question is, can you use stablecoins, for example, or until such time that there is CBDC, is there a use to stablecoins? So in this example, we used stablecoins in deep tier supply chain finance. So supply chains are plagued, again, by the lack of finance. So you have an anchor buyer, say Nike. They have many suppliers. They're upstream suppliers. The further you go, the less access they have to finance, because likely the smaller they are. So we worked with a company called LinkLogis that in China puts these suppliers together with the anchor buyer on a platform. By putting them on a platform, you create already the most needed, which is transparency. And the more transparency you have, the easier it is to extend credit. The problem is this kind of system becomes difficult in a cross-border context. So for this example, what we did is we added a stablecoin. And the stablecoin can be issued. We had different hypotheses. It could be issued by the anchor buyer, which is Nike, could issue that stablecoin to the first tier supplier. The first tier supplier can give that as a payment to the next supplier. It can be sent also to the next supplier. And you could actually, because it's a tokenized asset, you could easily create a secondary market for it. So for institutional investors, I could decide I offer you a discount for what actually is a relatively safe token. That is if the corporate is the issuer. Safer would be if the bank is the issuer. So Standard Chartered was our partner on this project, and Standard Chartered became the issuer of the token. That was a second example. But in that example, the anchor buyer has to fund, right? Because he has to keep the assets on deposit. So that is a constraint. So again, with the third approach, which could be to back the stablecoin issued by Standard Chartered by a guarantee of another bank, like HSBC. And then these tokens become actually quite liquid instruments. So as said, you could hold that token, or you could, for example, transfer it, as I said, upstream, or you could use it to exit from the token and to create liquidity in a secondary market. Now, in addition to that, this project showed programmability of this money and the benefits of that. So, for example, we connected it to Trade Trust, which is a new setup in Singapore where the bills of ladings are being digitized. So we could make this token only payable when the goods are on the ship. This is how it should be, actually. And this can be triggered through smart contracts. So in some, these tokens actually are not ERC20 tokens. They are the ERC tokens of the NFT standard because they are each individually programmed with individual conditions. The next triggering condition we made, and this is more for showcasing, but for opening a set your mind, is you could also link this to ESG conditions. So for example, say I'm Nike, and I want to encourage my supply chain to be ESG compliant or to have a higher standard to ESG. And so ESG, if you don't know what it means, it's explained here. It has an environmental factor, a social factor, and a governance factor. So you could put certain targets on your suppliers. And if these suppliers meet the targets, you could, you could, for example, increase the payment through smart contract. Lastly, in this prototype, we used eKYC and specifically corporate eKYC, which is the most difficult to resolve field. One of the reasons why the banks have such a hold onto the financial sector is because they unravel the corporates. If you can create a kind of a different approach to this is a wallet approach to corporate identity. This company actually is founded by the former CE of the HKMA. Some of you may know Norman Chen. So it creates a wallet approach to corporate identity. And I can share my wallet with 5 or 6 banks as opposed to having that bank by bank relation. Anyway, have I run out of time or you want me to do Genesis still? Okay. So Genesis, again, to open your mind, tokenization project, and I'll go fast. The first project of this was to look at tokenizing government bonds for distribution to retail investors, and these were going to be green bonds. We were exploring there the benefits of fractionalization because in Hong Kong, the denomination is high and we can bring it down. In the second project, we went a step further. We focused there on institutional investors, but the key thing we were trying to achieve is an automated smart contract-based delivery of carbon credits as being your coupon. So your coupon, rather than cash, becomes a carbon credit. And that could be highly attractive because carbon credits are something that highly likely needs to be bought by the polluters in the future to meet their net zero targets, which they all have by 2050. So in sum, this is how the flow of the bond goes. There's, of course, a premium being paid, and in exchange, you get these mitigation outcome interests, which de facto are carbon credits. So how is this achieved? Let me make it simple. So you have a tokenized bond. The benefit of tokenizing the bond is every of the processes can again be instant, much like what was demonstrated to you for CBDC. On top of that, you have your investments. So for example, in this case, the bonds are invested to fund the construction of a solar plant in Africa. Let's make it that, right? So you attach IoT devices to the solar plant. These IoT devices monitor the creation of the carbon credits, and these carbon credits through smart contract can be delivered to the wallet of the investors. What you achieve is you achieve financing of this problem between the global north and the global south. The north is the polluting bit, and the south is the one with actually the future opportunity to be a place where carbon credits are being generated. So that's Genesis 2. These reports have full prototypes. You can take a look. They are based on partnerships, Goldman Sachs, All Infra, Digital Asset, Interopera, and other organizations. They also have a term sheet, a legal term sheet, because if you want to sell a bond, you need a term sheet. And so that's it. I'll leave it at that. This is just to show you the cover of another report, which you can look at if you're interested in understanding, so what is CBDC, what is this mysterious deposit token, and what is a stablecoin. In some asset, I'll leave it at that because I think I'm running out of time. Thank you.
Thank you. Governor Amir Aharon will be joining us in a few minutes. So before that, the FIS is a global leader in technology and services for the financial industry, offering a wide range of financial products and services. Julia Demodeva leads FIS work on CBDC strategy and public policy, and we will speak about FIS approach to different types of regulated digital money and products that they will be offering in the space. Julia, the stage is yours.
Thank you so much for having me today, and thank you so much for making transactions and payments. So maybe quickly to recap, we had 50 payments made at the booth. You purchased some of the souvenirs. We had 75 accounts registered, so well done for downloading the wallet and being part of the payments ecosystem here. And then we had 140,000 shekels issued, and we had 27 issuances and 4 redemptions from the M10 bank. So thank you so much for participating at the booth. It was great. Hopefully next time we can do more transactions, and hopefully this could be real world transactions. So quickly about today, I'm going to talk about digital regulated money and what we are doing at FIS. And there are a lot of probably questions. How do all these regulated types of money live together? So at FIS, we structure ourselves across 3 main segments. So we provide end-to-end payments. We have merchant solutions, we have banking solutions, and we have capital market solutions. So of course, for us, it's very important, to provide new alternative payment methods, whether that's a CBDC, whether that's a regulated stablecoin, or whether those are tokenized deposits. And by digital regulated money, I mean any type of regulated money that exists or will exist. So this is a high level of digital currencies connected ecosystem, which is powered by M10 technology. It's a private permissioned blockchain platform. So in the middle, you can see digital money platform. It's a blockchain platform, as I said. And then, of course, you have a seamless interconnectivity integration to your RTGS and account-to-account payment systems. On the left-hand side, you can see how digital regulated money platform is going to connect into your payment hub, and how it's going to link up to your payment platforms, core banking platforms, and existing systems that you would run at the commercial bank or at insurance company or whatever it is. And then, of course, you would also have your command centers, and digital currency platform also provides a wallet. You have seen the wallets today, and then, of course, we will enable user devices for the payment as well. At FIS, on the merchant side, we run ATMs, and we do provide points of sale, so those would be enabled to accept CBDC or regulated stablecoin. And then, of course, on the right-hand side, you will see all the shared services. Those could be digital identity, it could be KYC, AML, it could be your fraud systems, it could be smart contract applications. So we're very much looking at this new alternative payment methods from a perspective that we need to adjust our core systems at FIS to support these new alternative payment systems. And I've actually met a couple of banks in the hall that were using FIS's systems. So, and we are enabling this for them, hopefully in the future. Again, this is kind of, giving you more of a, maybe technical perspective, on, what it looks like. You have a, shared hierarchical ledger, and you have your, digital, shekel. You have your, CBDC. You have your regulated stablecoin that, will be on this, shared, ledger, and you can have, any other assets on the on the ledger as well. And then, of course, you also have additional applications, whether that's, FX, service, or AML or CFT. So this is just another iteration of what we showed before. So this is what you would probably look like from the kind of architecture perspective. So you have your core ledger, and here you can tokenize commercial bank deposits. You can tokenize your central bank reserves. You could tokenize your CBDC, or you could tokenize your money market funds, or those could be again regulated stable coins in Europe. Of course we are looking forward to MiCA to take off in Q2 of 2024. So again, we are looking, to advance and perhaps, offer our, commercial bank clients, regulated stablecoin EMTs or ARTs, or you could also tokenize private stablecoin as well. It depends if you want to do so. And then, of course, also part of the core ledger, you have FX service. So the BIS have explored this, concept of singleness. Some of you may have seen that report. So again, on the core ledger, you can seamlessly exchange one asset for another asset, and it's going to be instant and atomic settlement between various, digital regulated types of money. If you want to, exchange your bank deposit for your money market, piece of your money market fund, you can do that, and you can do that atomic, transaction. And again, fitting within the, various applications. Those could be embedded finance applications. We were on the premises of Bank of Israel yesterday, and there was, discussion on the kind of, embedded finance as well. Again, there will be, I would say, seamless interoperability with your embedded finance applications. Those could be, retail pay or, trade finance, bill pay, whatever it is. And then, of course, supported by, platform shared services as well. Here is, this is probably more important, for commercial banks. And again, no one is disintermediating commercial banks. I think, all these digital currencies will exist in the future. Here is, kind of enterprise view, and this is how you would, see this. We basically will enable commercial banks to provide, the back office systems, will be upgraded, and the front office, systems will be updated as well. And the most important, we use the API first model, so it will be connected to your, digital currencies connected ecosystem. So seamless integration, seamless interoperability with your existing core banking platform. So you don't need to rip and replace any of your core systems. You can just, connect, to the connected ecosystem through our API gateway, and it will allow you that seamless connection. Here is, just, quickly on kind of, M0 and M1 money. Again, you have M0 money and you have M1 money, and what basically this slide here shows is that, you, if you are user 1 and you want to send funds to user 3, that, from bank 1 to EMI, that will be seamless. It will be atomic, instant, with instant finality. Again, you have both, M0 money and M1 money on the same shared hierarchical ledger, so your experience becomes more seamless. Atomic PVP with, DRM. Again, I think, Michael has alluded in his presentation about PVP use case. I think, that's one of the use cases that, tokenized deposits, of course, is achieving. We also have, of course, delivery versus payment. We have IoT payments. I think Benedict mentioned IoT payments. And of course, you have, programmable money. And I think Daniel, in his presentation with Martin earlier, talked about, programmability and programmable money, and how, this could make our lives easier. At FIS, we're very much, supporting all the use cases. We were, providing, I would say, very seamless interoperability integration with your existing payment systems. And here is, kind of, high-level command centers, example command centers that, you would have. And you would see, we've used, Bank of Israel logo, and we have used HKMA logo. Essentially, you could log in and you can see aggregate amounts of money, how many CBDCs were issued in the industry, how many tokenized deposits you had issued, and how many are being redeemed, and how many are still pending. So again, those dashboards are fairly flexible, and we're working, of course, enhancing and adding additional functionalities like offline payments into this as well. So hopefully in the coming months and years we can demonstrate more functionality and our ability to do various use cases. Here is briefly what the wallet could look like, and we have we've used Bank of Israel logo here. What you can see here, you have your checking account, you have your CBDC account, and then you have your DRM account, which is a tokenized deposits account. Again, this can be configured. You can have your regulated stablecoin. You can have any other type of account within your wallet. And then I think, most of us have heard that central banks will probably set some limit on CBDC. So again, if you have overflow CBDC in your account, it would automatically transfer into your tokenized deposits account or into some other account that you instructed in. So that's how we are kind of thinking what the wallet of the future is going to look like. Here's just how some of the transactions look like. So I think that's all from us. I don't have a fancy QR code, so there is no report at the end to read. But I hope you enjoyed the session, and the clock says I am on time and I need to pass it over to someone else. Thank you.
Thank you. Checkpoint needs no introduction in this audience. As one of the jewels of the crown of the Israeli high-tech sector, it is a global leader of cybersecurity in general and cybersecurity for the financial industry in particular. Dan Karpati, Chief Technologist in Checkpoint, will tell us about some of the recent developments on cybersecurity in the financial system.
Hello, everyone. So, as Daniel described very nicely, the cybersecurity parts in the previous version, I want to take advantage of this session and maybe share with you some thought, looking forward thinking about the cybersecurity, and open your mind to some other parts of the landscape. Just to mention, part of the experience that we contributed to this effort is basically the cybersecurity committee that we have inside Checkpoint for our products, in addition to our experience, of course, as a security vendor. So we had distinguished architects, pen testers, researchers, all were involved in these beautiful projects. So we can talk about this, the ransomware becoming an invasive phenomena, and you see the graph is, like the inflation outside is booming, but the 40 million is per ransomware attack. So every attack, this is the amount that need to be paid, and you see the trend. And we can talk about this famous, anyone familiar in Israel, but it's not only in Israel, this phishing attack. You have a package and the credit cards have been compromised, you're all familiar with. But I would like to take advantage of the audience and talk about the software supply chain attacks. So what you see, those three are the most evasive attack in history. Why? The reason is because the attackers did not need to deploy any software. So they took advantage of the software already deployed on the customer premises, and they found the way inside. So the right one, SolarWinds, very famous. Most of the US government was paralyzed, Log4j. More than 40% of the corporate networks globally were affected. 3CX, it's a voice application, and was compromised by a North Korea group. And this all led in 2021 by Biden administration for the executive order 14028. Are you familiar with this executive order? So this is a point in history because this executive order, which tasked NIST to come up with standards, and everyone that wants to do business with the Department of Defense and US government need to come up with software bill of material and some other standards, which means a complete change in the way that you do business in terms of cybersecurity. So many companies are joining the efforts. And just in a nutshell, we will not talk about it too much, but in a nutshell, you need to show, because 70% of the code is open source or other party or vendors, you need to show the code, how it is compromised, how it consists of many parts. You need to show the way that it is secured. You need to show the provenance. Provenance is the authenticity and the originality of the code. And maybe the analogy is a clean room. You need to make sure that your way that you build and deploy code is like, a production line. Everything is intact. No one can get inside. A few words about generative AI. This is the year of generative AI. And this is my hobby and checkpoint, and I thought that it will be nice to spare a few words about the implications of of generative AI on cybersecurity. So there are 4 parts that I would like to discuss. One is shaping the next normal of human experience. The second one is unparalleled threat prevention. The third is AI as emerging threat, as a technology. And the last one is about the data. Data as a strategy. So ChatGPT, we all want to use it. We want to be successful in our work, but there are risks involved, not only on leakage of information to outside, but also bringing inside information. Also code. People using it or software engineers using it to get code being generated. And this is yet another attack vector that can get into your supply chain. Another path is the human experience, okay? So think about generative AI is good where human operates machines, okay? So think about the future. The way that we will tackle cybersecurity will look very differently. So we will ask questions in order to understand what's going on, instead of trying to go machine by machine in order to solve it ourselves. So basically you can connect your ticketing systems to generative AI, and it can help you solve it by itself. Another trend that I foresee is that enterprises will isolate their data more than ever. Why? Because LLMs, the fundamental, the underlying deep learning techniques that is going on and the way that they build their knowledge bases actually make enterprises to isolate the data more than ever, and then keep it more isolated in their on-prem, which will lead to more AI that will be on-prem based. And you are coming from the banking industry. I foresee LLMs and AI as a service, more like also on the on-prem side, not only on the cloud. And there will be ways to do it. So will be more GPUs deployed on the edge, more like personalized security, understanding your stuff, because LLMs can learn your habits, your customers, your individual data. New attack will emerge as of this technology, and there are 2 parts here. One is that the attackers will use more and more AI in order to orchestrate orchestrate big attacks. Use it for deepfake, use it to generate emails, bogus emails, use it to find weaknesses in the AI technology and so on. And the other part is, as I mentioned, to wrap the AI with some shields in order to protect it. Another phenomena, and you cannot see it right now, but when people are talking about the dangers in AI, is not like using it for ChatGPT and see the text that is coming back, but in the future, all the back office will be connected to the results coming from the ChatGPT. So, for example, to support call centers, or if you are calling for help with your checkpoint machines, someone will do it automatically. It will be a machine to machine, and then attackers can use this technology in order to understand what's going on in your back office, and then orchestrates attack on top of it. Data becomes a strategy. What does it mean? It means that those that have, let's say, for example, checkpoint, if we are global-wide and we have devices all over the globe and machines like firewalls and endpoints, the data that we see every day is something that we can leverage towards better and better solutions as opposed to small vendors. So data will become a strategy. I can say, for example, checkpoint, we try to think from now on data first. So what we need to do in our products in order to generate the data that we will have. So sometimes we will prefer data over revenue, okay? For in future looking thoughts. So just to tie it back to Web3 and blockchain. So there are the three parts, building blocks you are familiar with, the decentralized application, the smart contract, and the blockchain system, the underlying system. And there are two types of attack categories. One is a contract, a smart contract that is malicious by nature, produced by the attackers. The second category is vulnerability in the smart contract. So there are three main attack vectors before uploading the smart contract, while running, okay, it's been uploaded and acting, and after fact, of course. So we see security vendors penetrating the attackers in two main points, before uploading the contract to do validation, and also in runtime, kind of firewall. Okay, so there will be two parts of solutions. One, to validate the contract before they are uploaded, and the second one is kind of a firewall that sits between the blockchain and oversee what's going on. Main takeaways, software life cycle, you need to consider it like a clean room. Second one, smart contract is the weakest link. And the last one, remember, generative AI will be shaping the next normal of human experience. Thank you.
Thank you, Dan. Clifford Chance is one of the largest law firms in the world with special expertise in the financial sector and in the legal implication of the developments in technology on the financial system. Diego Balonosio, a senior partner in Clifford Chance, will share the firm's perspective regarding recent developments in payments and how they look from a legal perspective.
Thanks, everyone. You'll be pleased to hear that I'm a lawyer, but I'm not going to be reading you any laws. And in the trend of keeping data safe, I'm subject to some confidentiality restrictions. And so I thought about what would I say today? What would I talk about when I talk about some of my work? I thought I introduced Clifford Chance and what we do very briefly. And then instead of giving you some of my projects, which my other clients would probably not like, is I'll give you some trends around what we've been seeing from a lawyer's perspective in the development of payments. And then I'll talk a little bit about how we think of regulation. I do regulation in my day-to-day job, and how regulation in payments currently looks and how it might look in the future. And so without further ado, Clifford Chance, we've thought about technology and the fact that technology is changing the world for a long time. We've taken a slightly different approach to other firms in terms of how we would approach technology. We've built a fintech practice that is global, and what that means is that we get lawyers with different specialisms to work together in order to tackle technology-related problems, and we do that across multiple jurisdictions. And so when we work on a project, we are really lucky in that we get the perspectives of different experts, a little bit like what we've done in this fantastic project, which is Project Sela, where I was lucky enough to participate in some of the really interesting discussions that went on when we were designing the project, when we were thinking about the issues, and I hope I was able to contribute with a little bit of the legal insight. And so, we at Clifford Chance try to do that throughout in all our projects. When we don't do it with other people, we do it in the context of our involvement. I know that we've got only a few minutes time. Let me spend 2 minutes on talking about how payments are regulated today. And what I've done this is not really specific to any jurisdiction, but payments are regulated chiefly in two ways. You've got, on the one hand, the regulation of payment infrastructure, and then you've got the regulation of payment services. And when we talk about payment infrastructure, what we think about is all the good things that you need so that the payment infrastructure at the very top, the payment systems are safe. And we do that via application of global principles, the CPMI principles for financial market infrastructure. We focus on systemic risks, and the idea here is to put in place proper governance, operational risks, and make sure that the transactions on the systems actually settle and work properly. And then there's a shift. Then people sort of stop thinking about it holistically, and we move to what we call is the regulation of the service itself. And what that means is that we look at the rules that would apply to the people who are facing the ultimate customer. We apply a rule set. We make sure that AML and countering terrorist financing is applied. We make sure that the client is informed of things, and we put consumer protection in place, and make sure that the customer data is well protected. Now, what we're seeing is that worked really well in the context of traditional payments, where we had that little chain that we've seen in the beginning of our projects. What we're seeing now is that there are so many novel propositions in payments where the traditional payment space and the traditional payments chains are being disrupted. And I've just set out 3 themes here that illustrate this in a way. We've got at the very end of the spectrum an entirely bypassing system of the traditional framework, where we look at the use of digital assets entirely in the entire payments block supply chain, where effectively the payment is done within crypto assets entirely. So you've got one wallet, custodial wallet from another custodial wallet. We see that it happens less because people are not necessarily tech savvy enough to pick this up, and so the retail adoption of this is limited, but it's growing. The issue with this is, of course, that, until now, we're only developing regulatory frameworks in respect of digital assets. That entire payment aspect sits outside the regulatory framework, and to the extent that there is regulation, it is varying between jurisdictions. It's very different in different places. And so, some of the questions that we get as lawyers is it okay if I just facilitate my business on the basis of USDC or whatever. And the answers to that, normally start with, well, in what jurisdiction are we talking about, and how does this work, and what do you actually mean? And sadly, what firms then find is that it gets trickier to navigate different regulatory frameworks. The intermediate model is sort of something that looks a little bit like that, where you use public blockchains in order to facilitate a payment, but you've got at the very end two regulated payment providers, and you've got two payment services providers that sit locally and may have been regulated, they may have received a license or something like that, but the payments chain, the intermediation has been supplemented by some sort of blockchain, and you use a digital settlement asset that sits in between. The regulatory aspects of that are clear for the end users. The people who face the customer are, clearly within the regulatory purview. You've got then a question around what happens with the chain, and is that infrastructure, should that be subject to some sort of PFMI principle regulation or not? Those are the questions that we then get asked, and typically the answer to that is, well, probably not, because regulatory frameworks don't work like that. And then I think on the other end, in the fully regulated space, what we've seen is financial services providers coming up with this sort of solution where they don't want to rely on public blockchains, but want to sort of integrate their blockchain and do it themselves. And what that then means is that they create their own asset, their own token, and use it to settle transaction between jurisdictions. We see that with global banks who have done that. So that's what we're sort of seeing in payments. So what is this leading to? The trend that I think I'm picking up is that with the use of technology, in particular with distributed ledgers, there are proposals that we're moving away from the supply chain as we know it in the payment space, and we're heading towards a space where technology is taking that step and sort of amalgamating some of those steps. And that leads to really interesting questions, because all of a sudden, technology providers are partnering or pairing themselves with the traditional financial services industry. And the challenges that we've got as an industry, as service providers to that industry, is how should we deal with those? Should these providers be regulated in the normal way? What would happen if you did that? Because normally some of these technology providers don't see themselves as financial services providers. They see themselves as technologists, as somebody who can provide their service to a bank, but they can also provide their service to a supermarket or somebody else. Their revenue streams and their risks and the prudential treatment of their businesses differs. And so, it's not easy to do that. What's happening in this space right now? At the moment, regulatory authorities are focusing in on the dependency of these technology companies. That's the clear focus at the moment. So what we are seeing is that jurisdictions are saying, right, if you're dependent on these four cloud providers, then we need you to put in place certain agreements, certain things that make sure that you are really checking your risks, your outsourcing risk, and that you've put in place adequate agreements, you're checking the relevant things. Is that enough? Is that enough? Is that the right way of approaching this? Or do we need to deal with the whole question slightly differently? Is it worth bringing in the entire service provider within the regulatory framework? And I think the biggest challenge yet is how to deal with decentralization. To a large extent, this question around how you regulate technology is easier when you've got a single provider that's doing this. When you start looking at decentralized offerings, which are also sort of acting as the infrastructure, then the regulatory foothold of an authority gets lost, and you start running into problems around, well, where is the node-based, who's running the smart contract, can you even pinpoint the location of the users who are programming these smart contracts? And the answer to that question typically is, no, you can't, because they're everywhere in the world. So what should be the approach to this? And those are the questions that need to be answered in order to continue to drive this innovation. Now, some of you may say, well, we don't want that. We don't want unregulated businesses providing crucial infrastructure for our businesses. That may be the right approach, but I think it is the fact that people are developing these protocols and these smart contracts are out there. So one potential solution could be to start thinking about regulating the technology in a particular way, looking at cybersecurity, looking at whether the smart contract that's out there has achieved what it should be, getting that licensed, and then looking at who's using it and see whether that requires a separate license. So there are ways of addressing this, but these are the trends that we're looking at the moment. I just want I want to leave you with those thoughts. They're really just to provoke the sort of things that we do. Thank you so much for your time, and I think we've got a great presentation that follows, so thank you very much.
Governor of the Bank of Israel, Professor Amir Aron, was unfortunately unable to spend the first part of the day with us. That's too bad, Governor. You miss an opportunity to enjoy a full day of monetary policies. Without full monetary policy, inflation, or how this affects my mortgage. Jokes aside, Governor Aron has made a financial innovation a cornerstone of the bank's strategic plan over the last several years. The Digital Shekel project, along with many other innovations that Israelis are already enjoying or will enjoy in the near future, are a direct result of this pioneering strategy. I'm honored to invite Governor Amir Aron for the closing speech of today's conference.
All right. So first of all, good afternoon. So the reason I couldn't be here earlier is I just landed from the BIS. So more formally, the blessing for this event are coming directly now from the BIS with all the relevant parties, and we're very glad for our guests around here. So again, good afternoon to everyone. So I landed at 5. Hopefully my speech will be coherent. About 1 year ago, after I came into office, the Bank of Israel has set a long-term strategic working plan. One of its most important pillars was to prepare the effects of advanced technologies on the financial infrastructure in the digital area and explore how to promote innovation in the financial system. Specifically, when I got in, Israel's payments ecosystem was lagging behind in several aspects. So I came from the US and I just couldn't believe there was not even an EMV or a way to do tap here payments. We've since then taken many steps to advance the system, some that have already matured and others that will mature in the near future. Another component of the program was to think about longer-term implications of technology, payments, monetary policy, etc. In that context, the CBDC project that we had launched shortly after that plan was formulated is one of the most important elements and definitely one of the most interesting. As the economy is digitizing so rapidly, and with the massive changes that the financial system is undergoing, we could not go by without asking ourselves seriously whether the Bank of Israel must issue the money that it provides the general public also in digital form, and if so, how, and what would be the implications? CBDCs are relatively a new concept. While there are some earlier examples, the term was apparently coined for the first time in 2016 by Ben Broadbent, the Deputy Governor of the Bank of England. And that's only 7 years ago. Time in the new era flies fast and advancements are moving fast, which means central banks have to react accordingly. Being such an uncharted territory, on the one hand, and with so much at stake in terms of both risks and opportunities, on the other hand, it is imperative that we do a good job in studying and analyzing the implications, design choices, and risks. For that, international cooperation is a crucial key element. The Bank of International Settlements has been at the forefront of the research on CBDCs, and its innovation hub has been leading some of the most cutting-edge projects in the field. We are privileged to have had the chance to work with the Innovation Hub on this project, as well as on Project Icebreaker, where together with the central banks of Norway and Sweden, we offered an innovative model for efficient, safe, and accessible cross-border payments with CBDCs. For CBDC to be successful, interoperability is a key element. And this is another reason why it is so important for us to cooperate with other central banks. Benedict, please pass on my appreciation to General Manager Carstens. I just saw Augustine. It feels I saw him. I did see him a few hours ago. So for our joint work so far as well as in the future, but I like to make that statement more formal as part of the speech. Next, Hong Kong has been a pioneer in innovation and a global financial center for many years. And we could not have chosen a better partner for Project Sela than the HKMA. Howard, thank you for coming here today, and please send my gratitude to my dear friend Eddie, although I saw him a few hours ago as well, or more formally, Chief Executive Yu, for the excellent cooperation and openness our teams have enjoyed together. I look forward to get a close impression at the work all of you are doing when I visit the Hong Kong FinTech Week next month. Central bank's jobs description used to be focused on doing economics, finance, market operations, and regulations. You didn't need to be a technology guru. You know, somehow you could have left it to the side. Traditionally, we view technology as a tool, something we need to harness in order to fulfill our job, but it was a sort of a sideshow. The digital revolution is completely changing how we view technology, and our CBDC project is a unique opportunity in which policy and technology explorations go hand in hand. This is part of what makes this topic so fascinating. It has implication. It's sort of combining the nexus, I think, of technology, payments, regulation, and monetary policy as well, and banking. Our thinking about the digital currency must be, therefore, as open-minded as possible. CBDC is not instead of cash, and that is very important for me to state here, or instead of commercial bank money, if there are banks here. It is another option for the end user, be it an individual or a merchant, to choose his or her optimal way to pay and to function in the new digital era. We are not just trying to digitize cash, which, and I emphasize this again, we have no intention to stop issuing, at least in the foreseeable future. Nor are we focusing only on offering a central bank alternative to existing payment systems, which we intend to continue to develop, support, and innovate. Everybody understand? Faster RTGS, connected faster payments across, those are parallel things that need to be advanced in parallel to CBDCs. We must try to reap the best of both worlds, combined between reliability, stability, risklessness, immediacy, and full liquidity of central bank cash, together with the convenience, efficiency, and innovation that are offered by digital means of payments. And often there's the question, what's the use case for CBDC? And I think I've just articulated. If we can get all that bundle in, if we are able to do that, we would bring real value to households and businesses in Israel and abroad. But as we all know quite well, innovation does not come without risk. Mitigating cybersecurity risk is key to any critical financial system, and if CBDCs are to be successful, we must pay special attention to cybersecurity. The fact that Project Sela focused on this topic in the context of an open and competitive ecosystem of service providers is therefore very important. Around the world, there is recently an ongoing debate following concerns that were raised regarding the effects of CBDCs may have on people's privacy or on the ability of authorities to interfere with people's economic choices. While I do think many of these concerns were based on misconceptions or partial information, I guarantee here today, although CBDC can never be as anonymous as cash, because that would pose significant money laundering and tax evasion risks, if we choose to issue a digital cash shekel, it will provide at least as much privacy as other digital means of payments. For some payment scenarios, the digital shekel may provide an even higher level of privacy than that available today in the digital payment ecosystem. The main design choices we've taken in this regard were presented earlier today, and we will ensure these principles not only in regulation or procedures, but also in design as well. So we're thinking of that as all along. For example, as you saw earlier, Project Sela suggested a model in which the ledger is run in the central bank, but no one at the central bank has access or visibility to individual balances or transactions. The Bank of Israel or any other authority will never abuse the digital shekel system, and that is very important. We understand trust is a key here. The fact that the digital shekel system would be managed by the Bank of Israel would not limit the public's economic choices in any way, other than what would be needed to fulfill AML policies and the like. At the Bank of Israel, we strive for excellence in every field we operate. Our CBDC journey began a little bit later than that of several other central banks, but we have closed the gap relatively quickly. We have a great team. Some of you may not know, when the MIT Boston Fed white paper and open source code came out, our team found, how would I say, a mistake, and almost a day afterwards in open source. So we have a great team here, which also tells you why open source code is useful. And so I feel we bring a lot to the table, but we have a lot to learn from other teams. Our excellent connections with the central banking community and our ability to share knowledge with others are key and were key and are key in the future for this. Whether or not we'll issue a digital shekel is still an open question. I want to make that clear, as it is the case in most, if not all, other advanced economies. Either way, we remain committed to be at the frontier, and more than that, to support the effort of pushing the frontier in our CBDC explorations, as well as in our efforts to modernize and advance our payment systems in particular, and the financial system in general. As always, we will do this in a sound, careful, and responsible manner. Thank you very much.
Thank you, Governor Aaron, for these inspiring remarks. It's been a busy and fascinating day. On behalf of the whole project team, I want to thank you all for spending the day with us. If you still have not purchased the conference souvenir, you are welcome to do so at the booth outside. Refreshments are still available, so if you want to hang around and network, feel free to do so. Thank you, Shana Tova, and goodbye.